Good afternoon, traders. Joseph here from Eightcap. Welcome to this week's weekly wrap / review, and thanks very much for your time for tuning in. And I'll just start with during the week we have a lot of different presenters and we had Andrew Lockwood this week. So if you are enjoying our content and you do like the variety that's coming out, please feel free to subscribe, and then you'll be able to see everything new that's popping up. And feel free as well to drop us some comments if there's anything you'd like to see more of or hear more about. It's the same if we focus on something too much or too little. Please let us know. We'd like to hear back from you. So on to this week. Sorry about the itchy nose. The Fed's testimony was the key. It set off a pretty strong market moves on Tuesday, and really the message was more to the hawkish side. So I think the market been looking for something to really give them a bit of direction, and I think they sort of got that, but it obviously wasn't in a risk-favored position. So we did see some pretty sharp, we saw a very sharp move on the US dollar. We can see that move here. So basically Fed Chair Powell came out and basically said that the peak rate figure that had been spoken about by other Fed members could be adjusted higher than first expected, and that also interest rates could, will continue to climb, and that also the frequency could increase as well depending on data. Now, later in the week on part 2, he sort of recapped that it really was data dependent, and not, there shouldn't be really a big overreaction. But I think that it was enough really to get the market going. We have seen some mixed reactions this week so far. So obviously after the initial real drive by the dollar, now this also really hammered into stocks. So we saw some really sharp moves. Now those moves have continued, and this involves yesterday as well. So we did have Silvergate it's going into liquidation. So that's another added issue. I'm not sure. I know that it has a bit of effect on cryptocurrencies, and it has really taken the wind out of there. So, but it could just be adding to the uncertainty as well. But there has been a bit of pressure on stocks, and this pressure is continuing into today's out of hours on futures. So you can see on the US 30 here, we are down 0.71%, and we can see the Nasdaq is 0.5%, and the SPX 500 is 0.67%. So they're all tracking the futures at the moment, and we are seeing other markets as well in the red. So it's not exactly the most confident finish to the week. So the ASX as well today has closed now, obviously, and it did finish over 2% lower at 2.28%. So it's a real, it just shows you the zero confidence going into the end of the week. We do have non-farm payrolls tonight, but we'll get to that in a moment. So today also we had the Bank of Japan. It was the last meeting for outgoing Governor Kuroda. Now they have, from what we've read, they've left the bond buying unchanged, and they have also taken a slightly more dovish stance, and that can be seen reflected in today's price with some pretty decent moves from risk currencies to the yen, and we can just see here which is sort of turning around on a pretty average week. So we had a couple big steps down during the week, and it's sort of finishing on a high note. We'll see if that can continue. Out of the three of those, the Aussie has really had a bad time. We'll get to the Aussie in a moment, but you can see the pound to the yen is still trying to hang on to support here. We're still looking to see if this could continue higher. It does have support. If that holds, we'll look for buyers to continue to build. The euro as well, it's probably looking better. We've got a nice step here above previous resistance. There's plenty of support here. We've got a nice bar here. If we can close above yesterday's bar and push a bit higher and then break this resistance, we'll definitely look for this trend to continue the march on. Now the Aussie, it's definitely not, as we just saw before, looking the healthiest. It's had its own issues this week. So we had the rate decision on Tuesday. So the RBA did raise rates as expected, but they have given a bit of a mixed outlook with the future of rate rises. So there's even some talk that there could be a pause coming. Now this has been due to a lot of backlash from not only the media but the public, and really the government as well, onto the Governor of the Reserve Bank of Australia. So we'll see what happens with that. But inflation, as seen, still remains at 7.4%. So it's not exactly a very healthy figure, and it's still, they still need to see that figure come down. So after that, sort of mixed messages about interest rates and potential hold. Then we had the Fed testimony come out, and with the raging US dollar, the Aussie dollar was hit pretty hard. So it's then you can just see that move there, and it was really knocked out of the park. And we can see here that it's a little bit of mixed trade afterward, and there's not a lot of confidence in the moment from buyers, as we can see. But also on the other side, sellers have been struggling to push it further lower as well. So it definitely looks like we see a bit of a stalemate here, and we will see if the non-farms this tonight in our local time can break that deadlock. And if we do see the US dollar either continue to push higher, or if we do see it retreat. So if we do see the dollar push higher and there's a lot of excitement in that buying, we could end up seeing the Aussie get targeted pretty heavily again on the sell side. So we'll see what that data does bring later on. So other markets this week, so obviously gold got hammered as well on after the Fed testimony, but we did see a very nice pullback yesterday. This is a pretty decent little level here now at 1810, and there's a fair bit of demand and support there. We have seen that go back into February, and we'll see if that can continue to hold. Price obviously had a good decline here, but we are starting to see a bit of stabilization, and we'll see if things don't favor the dollar, and if gold can get back up to test these areas and maybe break those areas and get back up to test some of these areas up here. But we really need to see that level of support hold down here. Now oil is continuing to trade in this range after what we saw last week was really some really nice moves. We started the week pretty firm, and then we had the declines come into the week. So this is, with all the talk of rates, and that really sets off recession talk, worry about demand, worry about business. So I think it really hurt crude in terms of a demand outlook, and we saw oil just continued to push lower. And really from a price perspective, it is just trading range bound now between these two areas here, and it really just needs to break that deadlock. That range is very wide now. There are good opportunities though if you are looking to try and make plays off the top and the low, or sorry, the lows and the top of the range, but just be very wary and just manage your risk in case it does try to make a deeper or higher test out of the range before it does hold its pattern. So, but we can definitely see some of the opportunities that have been presenting for a period of time now, as oil continues just to chew up a bit of time in the range. Now cryptos, we've done a separate video on them, so we won't really touch too much on them at the moment. Bitcoin's 1.44% lower after yesterday's 8% drop. This all comes back around with Silvergate and with their liquidation, and it's caused a bit of a crunch, as they were one of the main providers of if you were changing USD. So they will, I believe that there will obviously be short-term issues there, but long-term that will be filled and things should hopefully go back to normal. And now we will touch some of the stock indices before we wrap up. So we'll start with the Nasdaq. So as we've noted, we are seeing a lot of downward pressure after yesterday's move lower, and we're now seeing back at this support point. So if we would like to see that level hold for buyers, but if it doesn't, we have a trend break here with a couple of series of lower highs and a breakthrough this area with a close and confirmation that really could signal that there is a starting momentum is definitely turning to sellers. I would like to see that level broken first, though, as it looks a little bit patchy and it looks like there's a lot of defense going on around here from buyers. The S&P at the moment, we can see a pretty clean break below that low this week, and zoom out a bit. It continues to be now testing some areas we're not seeing really since January. Sorry, I'm on the 4 hour, apologies. So we have broken this low here, and we're back at this level down here at 38.91, and there's some congestion here. We're going to see if that does offer any resistance to buyers. But again, if we do see any more very deep pushes lower, and if the payroll data comes out tonight hotter than expected, that could set off further selling. So as it does add to the issues that the Fed's talking about, and then we'd be looking, if we did get back there, we'd be looking for that 3.8 area, 3.8010, really to lock in as potential support on the short term or medium term if it was tested. A breakthrough that level, that's a bit of a different story. If we do see a recovery, we'll just be looking for a bit of a retracement to pull back some of those losses yesterday. And for the US 30, the Dow, significant break of this area here. I talked about this area a few times, so there was a lot of support here. We did break through that area pretty convincingly yesterday, and now it's really about what's the next step. I think the data tonight has a fair importance for the picture, and then I think the key here as well is if we do see bears continue to hold control and we have a move lower, we'll be looking for that next rally to see if it is a lower high, if it's faded or not very convincing rally, and then we need to see a new break of low and a new push lower just to signal that yes, we are seeing a series of lower highs and lower lows, and that is a sign that we have a downtrend up and running. So we'll see how that pans out later. So over to tonight, obviously the key news that we'll be looking out to will be the US employment data, and that comes, and there is also Canadian data as well. So we've got that tonight at 12:30 AM Australian Eastern Standard Time. So the figure they're looking for is lower than the last figure. They're looking for 224K. Earlier this week we saw higher unemployment claims, which was seen as a touch of a bit of a, not a surprise, but that was it was an interesting release. But we saw the non-farm employment changes, the ADP, that came in higher than expected. But even though that's higher than expected, sometimes it's not a good predictor of what's coming out tonight. So if we do see a much higher than expected figure like last month's, that should set off some worries. But if it does come in lower than expected, or if it really misses and comes in way lower than expected, that could be seen as a positive tonight. So also Canadian unemployment data is also coming out today. We have 5.1% expected for unemployment and 8.5K for employment change. And the unemployment for the US, they're looking for steady at 3.4 and steady 0.3 in average earnings. So that's it for today's wrap. So thanks very much for your time and tuning in. Now, if you did want to have a look at some of our crypto video or some of Andrew's work, please head over to our channel, and there's some videos up as well there. So wishing everybody a great weekend and a fantastic end to the Friday, and definitely check out tonight's US employment data, and we'll see if this weakness we're seeing on stock index futures will continue to grow, or just how it pans out as we get closer to today's European and New York sessions. So thank you very much, and thanks again. Bye.